Most crypto investors watch Bitcoin's price. They track their altcoin gains. They follow influencers calling 100 times opportunities. Almost none of them watch Bitcoin dominance. That's a mistake. Bitcoin dominance is the single most important chart in crypto. It tells you when altcoins are about to explode. It tells you when they're about to get destroyed. It tells you where we are in the market cycle better than any other indicator. Understanding this one chart would have saved most people from the worst losses in crypto history. This video breaks down what Bitcoin dominance actually is, how to read it, what it predicts, and how to use it to position your portfolio before the crowd figures it out. Bitcoin dominance measures Bitcoin's market cap as a percentage of the total crypto market cap. If the total crypto market is worth $3 trillion and Bitcoin is worth $1.6 trillion, Bitcoin dominance is 53%. It's a ratio, not a price, not a volume metric. A ratio that shows how much of the total crypto market value belongs to Bitcoin versus everything else. When dominance goes up, Bitcoin is growing faster than altcoins, or altcoins are losing value faster than Bitcoin. When dominance goes down, altcoins are gaining ground on Bitcoin. Simple concept. Profound implications. Bitcoin dominance has moved between 35% and 95% over its history. At Bitcoin's launch, dominance was 100%. There was nothing else. As altcoins launched and gained value, dominance dropped. In January 2017, dominance was 87%. Then the ICO boom happened. Thousands of new tokens launched. Altcoins exploded. Dominance crashed to 37% by January 2018. Then the bear market hit. Altcoins collapsed. Bitcoin held better. Dominance recovered to 70% by early 2019. The 2021 bull run saw dominance drop to 40% as altcoins again outperformed. The pattern repeats. Dominance cycles between highs and lows in sync with broader market cycles. This is why dominance matters to your portfolio. When Bitcoin dominance is falling, altcoin season is happening. Money is rotating from Bitcoin into altcoins. Smaller coins are outperforming. This is when altcoin portfolios 10 times or 100 times. When Bitcoin dominance is rising, altcoins are getting destroyed. Bitcoin is eating market share. Altcoins are bleeding against Bitcoin. This is when holding altcoins means watching your portfolio drop even if Bitcoin is going up. The critical insight: you want to hold altcoins when dominance is falling. You want to be in Bitcoin when dominance is rising. Most people do the opposite. They buy altcoins after they've already pumped and sell when they should be holding. Phase 1, high dominance, rising. Bitcoin is absorbing all new money entering crypto. Altcoins are irrelevant. Early bull market or bear market recovery. Best time to accumulate Bitcoin. Phase 2, high dominance, falling. Bitcoin is still dominant, but money is starting to rotate into Ethereum and large cap altcoins. This is the signal that altcoin season is beginning. Time to start adding selective altcoin exposure. Phase 3, low dominance, falling, full altcoin season. Money has rotated from Bitcoin into mid and small caps. Meme coins pumping. Everyone's making money. Late cycle, start taking profits on altcoins. Phase 4, low dominance, reversing upward. Altcoin season ending. Bitcoin is about to reassert dominance. This is when most altcoin gains evaporate fast. Move back to Bitcoin or cash. Bitcoin dominance was at 70% in January 2021. Then Ethereum started outperforming. Dominance fell to 60%. Then altcoins started exploding. Solana, Cardano, Avalanche. Dominance kept falling, hit 40% by May 2021. Then Bitcoin crashed in May. Altcoins crashed harder. Dominance briefly recovered. Then the second leg of the bull run started. Altcoins pumped again. Dominance fell back to 40% by December 2021. Then the bear market started. Bitcoin dropped 65%. Altcoins dropped 80% to 95%. Dominance recovered to 65% as altcoins collapsed faster than Bitcoin. People who understood dominance saw this coming. People who ignored it held altcoins through a 90% crash, wondering what happened. Within the altcoin universe, Ethereum dominance matters too. When Ethereum starts gaining on Bitcoin, it's often the first signal that altcoin season is approaching. Money flows from Bitcoin to Ethereum first, then from Ethereum to large-cap altcoins, then to mid-caps, then to small-caps and meme coins. Understanding this rotation sequence tells you where we are in the altcoin cycle. When meme coins and tiny projects are pumping hardest, you're at the end of the cycle. The rotation has reached maximum risk. Start taking profits. Total stablecoin market cap as a percentage of total crypto market cap works as a counter indicator. When stablecoin dominance is high, it means lots of money is sitting on the sidelines in USDC and USDT waiting to deploy. High stablecoin dominance is actually bullish, dry powder waiting to enter the market. When stablecoin dominance is low, almost all available money is already deployed into crypto assets. Low stablecoin dominance is a warning sign. There's less money left to drive prices higher. Used alongside Bitcoin dominance, stablecoin dominance gives you a clearer picture of market positioning. Bitcoin dominance should always be read alongside total market cap. Scenario 1, total market cap rising, Bitcoin dominance falling. Best scenario, overall market is growing and altcoins are outperforming, maximum altcoin opportunity. Scenario 2, total market cap rising, Bitcoin dominance rising. Bitcoin is eating the market. Overall crypto is growing, but Bitcoin is growing faster. Hold Bitcoin. Scenario 3, total market cap falling, Bitcoin dominance rising. Bear market, but Bitcoin is holding better. Move to Bitcoin or stablecoins. Scenario 4, total market cap falling, Bitcoin dominance falling, absolute panic. Everything is collapsing, including Bitcoin. This is rare and brutal. Consider moving to stablecoins. As of 2026, Bitcoin dominance is hovering around 52% to 58%. This is historically moderate, not at the highs that suggest pure Bitcoin accumulation phase, not at the lows that suggest peak altcoin season. It's in a transitional range. What this means, Bitcoin is still dominant, but altcoins are gaining ground. We could be entering the early phases of altcoin season rotation. Or Bitcoin could reassert dominance if macro conditions worsen. This is where on-chain data, technical analysis, and macro awareness help you read the next move. Dominance alone at this level doesn't give a clear directional signal. It requires context. Bitcoin dominance can be artificially suppressed by the launch of new tokens. When thousands of meme coins launch on Solana with tiny market caps, they technically dilute Bitcoin's dominance percentage without representing real capital rotation. In 2024 and 2025, the explosion of meme coins on Solana likely suppressed Bitcoin dominance below, where it would have been based purely on capital flows. This is why some analysts adjust dominance calculations to exclude stablecoins and low-value tokens. Pure ETH-adjusted or large cap-adjusted dominance gives a cleaner signal. Simple framework. Bitcoin dominance above 60% and rising, stay in Bitcoin. Altcoin season is not here. Any altcoin positions are losing value relative to Bitcoin even if they're up in dollar terms. Bitcoin dominance between 50% and 60% and falling begin rotating a portion of Bitcoin profits into Ethereum and top 10 altcoins. Early altcoin season rotation, Bitcoin dominance below 50% and still falling, altcoin season in full swing. Selective mid-cap exposure makes sense. Take profits on large-cap alts and rotate into smaller caps if you have conviction. Bitcoin dominance below 45% and reversing upward, warning signal. Altcoin season likely ending. Start rotating back to Bitcoin. Move profits to safety. This framework isn't perfect. Nothing in crypto is. But it gives you a systematic approach instead of chasing pumps emotionally. Mistake 1. Ignoring dominance entirely and just chasing whichever coin is pumping, you'll always be late. Mistake 2. Using dominance as a perfect timer. It's a directional indicator, not a precise entry signal. Mistake 3. Assuming low dominance lasts forever. Every altcoin season ends, dominance always recovers. Mistake 4. Applying altcoin season logic to meme coins. Dominance rotating down means quality altcoins outperform. Not that dog coins are good investments. Mistake 5. Confusing correlation with causation. Dominance describes market dynamics, it doesn't cause them. TradingView shows Bitcoin dominance as BTCD. You can chart it alongside Bitcoin price and total market cap. CoinMarketCap shows dominance on their main page. CoinGecko shows crypto market share data. Glassnode has advanced on-chain dominance metrics. These are all free. Most investors never look at them. You now have a significant information advantage over people who only watch individual coin prices. Bitcoin dominance has trended down over the very long term, from 95% to a range of 40% to 70%. As more legitimate projects launch and gain adoption, Bitcoin's share of total crypto value naturally decreases. This doesn't mean Bitcoin is losing. The total crypto market is growing. Bitcoin's value in dollar terms can keep rising even as its percentage of the market falls. Long-term dominance decline is a sign of ecosystem maturity, not Bitcoin weakness. Dominance is most powerful when combined with other data. Bitcoin dominance falling plus RSI overbought on altcoins equal to take profits. Altcoin season is extended and nearing exhaustion. Bitcoin dominance rising plus fear and greed index in extreme fear equal to accumulate Bitcoin. Classic bottom conditions. Bitcoin dominance flat plus total market cap falling equal to wait. No clear directional signal. Stay in stablecoins or Bitcoin. Bitcoin dominance falling plus on-chain accumulation by whales equal to altcoin season has legs. Smart money is buying altcoins. The rotation has more room to run. Dominance is a lagging indicator as much as a leading one. By the time dominance clearly signals altcoin season, altcoins have often already moved 50% to 100%. By the time dominance clearly signals the end of altcoin season, significant gains have already evaporated. The best use of dominance is as a confirmation tool and a warning system, not as a precise entry and exit timer. Use it to avoid the biggest mistakes. Don't try to use it to perfectly time every move. Nobody does that successfully. Practical framework for different Bitcoin dominance levels. Dominance 65% plus, 80% Bitcoin, 15% Ethereum, 5% stablecoins. No small cap altcoin exposure. Dominance 55% to 65%, 60% Bitcoin, 25% Ethereum and large cap alts, 15% mid cap alts. Dominance 45% to 55%, 40% Bitcoin, 30% Ethereum, 20% mid cap alts, 10% speculative. Dominance below 45%, 30% Bitcoin, 25% Ethereum, 25% mid-cap, 10% small-cap, 10% stablecoins as dry powder for when the reversal comes. These are frameworks, not financial advice. Adjust for your own risk tolerance and conviction in specific projects. Most crypto investors look at individual prices. Smart crypto investors look at ratios. Bitcoin dominance is the most important ratio in the market. It tells you the story of where money is flowing, what phase of the cycle you're in, and how to position for what comes next. You can't predict the future. But you can understand the structure of how crypto markets move. Dominance is the map. Most people are navigating without it. Comment what Bitcoin dominance percentage you think signals peak altcoin season. I want to see what this community believes. Next video. I'm explaining on-chain analytics, the free tools that let you see exactly what whales and institutions are doing with their Bitcoin before it shows up in the price. Subscribe to Unbanked. The old money had a head start. You have the internet.